Hello and welcome back to How About That Crypto, your home for regular crypto and Web3 news and updates with your host, Bitcoin Stylist. Today's news and updates is about regulatory action. The European Union has finalized the text of their crypto regulations. Remember, it's called MiCA, or Markets in Crypto Assets. MiCA, Markets in Crypto Assets. So, what does it say? And then we got European Parliament is also pushing to use blockchain for taxes. And Kim Kardashian gets hit by crypto sheriff Gary Gensler. What the heck are you talking about? Not to worry, I'll explain it all. But first, please like, subscribe, follow, leave a comment. I want to hear from you. It helps support the channel more than you could ever imagine, and I really appreciate it. Don't forget, this is not financial advice. Use the links below to do your own research. And all right. If you've been watching my show, you would remember that earlier this year, I did some videos on EU's crypto regulation. And if you remember, there was some pretty prohibitive language in there, and that got removed, and then it was added back. Well, this has been going back and forth, and the text has been sealed, and now it's time to put up for a vote. If passed, the new Markets in Crypto Assets legislation, aka MiCA, will go into effect in 2024. So, what does it say? I'm going to share my screen. If you're listening on podcast, you can use the links below to follow along, or just listen up and you will get to hear everything. Okay, so we got authors Jack Schickler and Sandali Hangdagama report for CoinDesk, and the article's titled EU Finalizes Legal Text for Landmark Crypto Regulations Under MiCA. A leaked draft of the text reviewed by CoinDesk shows the rules could apply to algorithmic stablecoins and fractionalized NFTs. All right, so I'm going to read some stuff here. The European Union has finalized the text of the landmark Markets in Crypto Assets legislation, or MiCA. Officially, the text is still open to comments, but sources briefed on the talks have told CoinDesk that it is, in practice, finalized. MiCA, once passed into law, will require issuers of crypto assets to publish white papers containing technical roadmaps for platforms to register with the authorities, require stablecoin issuers to hold capital and be prudently managed. All right, so you could see this is going into what we've been hearing the SEC and Gary Gensler saying, that crypto needs disclosures. Well, he's saying securities need disclosures and cryptos are securities. I don't know, that we'll have to see, how that all gets played out. But what I do believe and agree with is that it would be nice I think there should be certain types of disclosures, and stable coins should prove that they're stable. I'm not just going to trust them. This is crypto. It's a trustless system. So why should I trust you? Show me the money. Okay. Anyway, keep moving on. The new draft also features changes that could indicate how the EU might treat algorithmic stablecoins, which were notably excluded from MiCA's scope when it was first introduced in 2020. Algorithmic stablecoins, similar to the recent collapsed Terra USD, or UST, which used another cryptocurrency and a bit of code to balance its price and supply, should fall within the scope of regulation, irrespective of how the issuer intends to design the crypto asset, including the mechanism to maintain a stable value. So basically, this is like, yeah, algorithmic stablecoins, I don't care what you call yourself, but they're going to come into, they're going to be regulated pretty hard. So what I see is, like, I don't know if we're going to see any algorithmic stable coins in crypto, or maybe they'll have to write up a white paper and then they'll looked at like a normal cryptocurrency. Maybe they won't be able to be called stable coins. I don't know. Maybe it'll just be called algorithmic coins, because I don't know of any algorithmic stable coins that are stable at all. The only decentralized stablecoin that I know of is DAI from MakerDAO, and that is over collateralized with other crypto assets. But so I don't think you're going to see another UST, at least, being used in the European Union. And I don't know about you, but what do you think? Let me know. Leave a comment below. Let's keep moving. Okay, so it goes down and it starts we talk a little bit about NFTs. So how are they going to be regulated? It says while the leaked draft thrashed out in a series of technical meetings following a June 30th deal shows MICA doesn't apply to NFTs that are genuinely unique and incapable of being traded with each other. The issuance of crypto assets as non-fungible tokens in a large series or collection should be considered as an indicator of their fungibility, the final compromise text says. So I think that that's really interesting. It says even if the issuer gave it a unique identifier. It says, keeps going on to say the details of the provision have caused concern within the industry. The exact drafting used could determine whether in practice the regulation covers the bulk of the NFT market, such as but distinct Bored Ape. So basically they're saying the Bored Ape Yacht Club, well, they're not that different. One is not really different than the other. Sure, one has a different hat and a different smile and whatever, but ultimately the concern here is that the way the language is written, something like the Bored Ape Yacht Club, because it's a collection, they would say they're relatively fungible. Maybe not with other collections and other pieces of artwork, but one Bored Ape to another doesn't have enough unique characteristics to distinguish itself apart from the rest of the collection. So that's what they're saying. Let's jump over to a more current article on this whole thing. It's by Jack Schickler, and it's with CoinDesk, and it's titled EU Seals Text of Landmark Crypto Law MICA Fund Transfer Rules. Legal text to license crypto firms and vet transactions were agreed by national diplomats after political deals were struck in June. So I'm going to read you a little bit from this. The European Union has agreed to the full legal text of its landmark legislation known as Markets in Crypto Assets Regulation, or MICA, alongside a further law to reveal the identity of those making crypto payments. So we'll get into a second, but that's a really interesting piece of this whole thing is like, there was like a big debate, if you remember, when I was reporting on this earlier this year, about whether or not you had to identify yourself, whether you could have any anonymity whatsoever within the European Union when using crypto. All right, let's keep going. MICA introduces the first ever licensing regime for crypto wallets and exchanges to operate across the block and imposes severe requirements on stablecoins that are intended to avoid terrorist-style collapses. A separate law on funds transfers requires wallet providers to check their customers' identity in a bid to cut money laundering. So there you go. I think that's also interesting because it kind of sounds like they're saying that you're gonna have to make identifying statements or verify your identity through wallet, which sounds like they're pulling away anonymity. I'm not surprised at all. And it says since June, officials and lawmakers have attempted to turn two political outlines agreed in June into a definitive legislative text. So what are those two political outlines? The first here is the crypto authorization law, says protect investors. Let's see here. So this is looking like the world's third biggest economy wants the market and crypto asset regulation to protect investors instead of strict standard for stablecoin issuers. So there's a stablecoin political outline, and then there's this other political outline is the no AML checks for most transfers to unhosted wallets. This is a Wednesday meeting secured a final deal on anti-money laundering legislation for crypto transfers and largely overturned a proposal from the EU Parliament to impose laundering checks on all payments to private wallets. And so that sounds to me like there's actually no definitive situation when it comes to the wallets. So I guess we'll just kind of have to wait and see as we get more information on this. And it also goes down here and says that, let's see, they're talking about US dollar denominated stable coins. So there was in the previous legislation that caused this to get rebuffed like a couple of weeks ago. It says here that like they could only have a certain amount of transactions per stablecoin, and that was going to really limit the use of other stablecoins and other fiat currencies to be used in the EU. But France, it says, wasn't interested in that, and they rebuffed that. So we're gonna still have to see what's gonna happen. I mean, if you can't use stablecoins, if stablecoins are limited in scope, then how are we going to move the money around in Europe? I mean, Europeans, if you're listening to this, what do you think about this? What do you think about anonymity when it comes to unhosted wallets? An unhosted wallet is a really bad term because it's really a private wallet that you own and you hold and you put your money in and move your money out from, and they want you to connect that to your identity. That'll literally take away all of your anonymity. Every single purchase you make or every single financial transaction you make will be on chain for anyone that has access to that information to see. If you want to learn more about this, you can go back and watch my videos on this, but it's not good. At least that's how it looks. And I'm down with the algorithmic stable coins being not a thing. I don't care about algorithmic stable coins. Do you disagree with me? I just want stable coins to show me the money. I want us to, let's see, what is the other piece here? This whole crypto wallet and exchange licensing thing. I mean, I get the licensing for exchanges, but crypto wallets, I don't like it. So we'll see. We'll see just how much this is, how well this is received and how well it's not. And I mean, at the end of the day, what's important is like, does this, prohibit innovation or not? And the jury's kind of out. For the most part, my research says that this is being well received in the crypto industry. Yeah, some people are worried about its limitations, but ultimately, by and large, this is being seen as a positive. What do you think about this? Let me know. Leave a comment below, and I'm going to move on. So I have an article here from Turner Wright from Cointelegraph titled European Parliament Members Vote in Favor of Crypto and Blockchain Tax Policies. So this is something completely separate from MICA. This has been voted on. It says the resolution recommended authorities in the Parliament's 27 member states consider a simplified tax treatment for crypto users involved in occasional or small transactions. So, and it continues on to say members of the Parliament of the European Union voted in favor of a non-binding resolution aimed at using blockchain to fight tax evasion and coordinate tax policy. So they're basically moving into using blockchain to probably have everybody's taxes being put on blockchain. It's what it sounds like, but it also sounds like they might just be talking about cryptocurrency using the blockchain to fight tax evasion with cryptocurrencies. So I think this is interesting because why wouldn't they do that? I don't know. It's just so weird. It's like you can literally run a software and but you have to know everybody's identification. So you have to have all identities connected to wallets, and then you can run an analysis on the chain with some software. And there's already companies that do this that can analyze every single transaction, so you literally can't cheat on your taxes. But maybe they could just run that software and just tell me what I owe them instead of me have to do my own taxes. Although that's in Europe, and I don't know if in America it's different, but I'm game for that in America. So I don't know. What do you all think about this? I think it's interesting. Here's a little quote here. The resolution added that the Parliament's member states can integrate blockchain solutions in tax programs. And I guess this is from the language here. It says blockchain's unique features could offer a new way to automate tax collection, limit corruption, and better identify ownership of tangible and intangible assets, allowing for better taxing mobile taxpayers. Work must be undertaken to identify the best practice of using technology to improve the analytical capacity of tax administrations. Well, that language does not sound like it's limited to your blockchain transactions and crypto. So, what I'm thinking is that all taxes eventually will be done on the blockchain and there will be no hiding anything. But I mean, I don't know. For me, I'm not really worried about it. Are you worried about being able to hide stuff in your taxes? I would prefer for my taxes to be a non-event. In America, you have to like tell the IRS what you owe them, and if they find you to be lying, then they come after you, even if you made an honest mistake. So I'd rather them just tell me what I owe them, and then I guess I'm still gonna have to have my accountant go over that paperwork. So I guess it doesn't matter, right? You still gotta pay that tax accountant. Anyway, what do you think about this? Do you think this is bullish? I think that if the industry says Mike is good, then it's good. There's also another video. I'll leave a link in the description below from the Coin Bureau, where he said that he had sneak peek access to the language, and he goes into depth in all of the different types of classifications of the different types of crypto and mica. And so there's like crypto, there's asset related tokens, something that are reflecting tokens. So it's something that reflects the value of an underlying asset. There's utility tokens like Bitcoin, Ethereum. They're used in an ecosystem. And then there's like a stable coin. It's called an EMT or something like that, like an e-money token. So like there's all these breakdowns. So it's considered very comprehensive, and the guy from Coin Bureau doesn't think that it's a bad thing. So right now, I mean, I'm most kind of positive about it. So we'll see as this text is being combed over. Apparently, there are not that many people that are familiar with the text, like intimately familiar, and apparently it's like 1,000 pages according to Guide to Coin Bureau. So as this stuff kind of comes out and we get more information, I will be reporting it to you. But ultimately, right now, this seems to be positive to be using blockchain. To be bringing blockchain and crypto into out of this area of uncertainty and give it some sort of certainty in terms of regulation, which should bring in institutional money. So what do you think? Leave a comment below, and I am moving on. And you made it to our the last story of the day, which is Kim Kardashian. So this article is by Mike Kalia and Jacqueline Corba, and it's with CNBC, and it's titled Kim Kardashian pays over $1 million to settle SEC charges linked to crypto promo on her Instagram. So if you've been following the news, you probably already have heard about this, but she basically said, hey everybody, on Instagram, hey everybody, I heard about this Ethereum Max thing, and it's where is it? Hold on, I saw a picture of it, the post. Well, it's like this Ethereum Max. Here it is. Are you into crypto? This is not financial advice, but sharing what my friends just told me about the Ethereum Max token, and ended up being like a scam, and they paid her to say this stuff. She got $250,000, and let's see what CNBC has to say about this. So here you go. I want to play this clip.
This morning, the SEC is charging Kim Kardashian for a post on her Instagram last year that endorsed a crypto asset security sold by Ethereum Max without disclosing how much she was paid to promote it. Joining us with more this morning is our own Andrew Ross Sorkin, who talked to Gary Gensler today on Squawk. Hey, Andrew.
Hey, Carl. We've got a lot of news on this. The SEC saying Kim Kardashian has agreed to settle the charges, pay more than $1 million in penalties, and cooperate in an ongoing investigation. In a statement to CNBC, Kardashian's lawyer saying, quote, Ms. Kardashian fully cooperated with the SEC from the beginning, and she remains willing to do whatever she can to assist the SEC in this matter. She wanted to get this matter behind her to avoid a protracted dispute. The agreement she reached with the SEC allows her to do that so she can move forward with her many different business pursuits. Now, I spoke with SEC Chair Gary Gensler, as you just mentioned, earlier this morning, and I asked him about the rules around advertising, since we've seen many celebrities endorse crypto on social media and in commercials.
That if you're advertising perfume or you're advertising vacation homes or anything else on the internet, there are various laws related to that. But these are the securities laws, and those other laws might be appropriate to just say hashtag ad. But in the securities laws, Congress put in place that you have to disclose not only that you're getting paid, but the amount, nature of it. And this was really to protect the investing public when somebody is touting a stock, and whether that's a celebrity, an influencer, or the like.
Carl, Gary Gensler there, sending a warning shot to influencers everywhere about what should be required when it comes to disclosure. We asked him about exactly what that disclosure looks like, and I have to say, as strict as you may think the law is, it seems like there is some distinctions between where social media may lay. She had a hashtag ad on her post, and where an ad that might run in the Super Bowl with Matt Damon may lay. I don't believe that there's disclosure there about exactly how much he may be paid. There's also another issue that a lot of folks in crypto are watching in this, which is that Ethereum Max has clearly now been deemed a security, which raises all sorts of other questions about how other tokens will be regulated in the future as securities or not, and whether places like Coinbase will ultimately have to turn into a broker-dealer if, in fact, it is not simply an exchange dealing with securities. So an issue in the news that a lot of people are going to focus on because of Kim Kardashian, but folks in finance as well.
Okay, so let's break that down. So basically, if you're a celebrity or an influencer and you're promoting a token, you have to say what you got paid, and you have to say this is an ad and this is how much I got paid. But if you're an influencer and you're selling perfume or pants, all you have to do is say this is a paid promotion, or this is an ad, or maybe hashtag ad is enough, is what they're saying. But when it comes to promoting a specific token, because it could be considered a security, then they're saying that you have to put how much you got paid, not only that it was an ad. And then he brought up Matt Damon's Super Bowl ad about crypto.com, but he was advertising crypto.com. He wasn't advertising a specific crypto token. Now, he did also make the point that, all these enforcement actions are setting some sort of precedent. So now crypto companies are going to have to navigate the rules of the road based on all these enforcement actions. And with new legislation coming, that could potentially influence U.S. regulators. So we really need to understand what we like and what we don't like, so that way we can actively lobby our representatives through donations, making content like this, and calling them and making sure that they understand what's important to you in US. And if you're in Europe, please tell me what you think about this new crypto laws, the MICA laws. And I'd like to hear from you. And other than that, have a good day. Huddle on.